Michael Saylor, MicroStrategy has been buying the recent dip, so we can infer your view on whether this was or not a short-term blip. But from what you're hearing, did it have any impact on corporate interest in Bitcoin? Things got pretty hairy there for a while.
Yeah, I think that Bitcoin's one of those stories where if you're only casually interested in it, you just look at the price volatility and the deeper you look at it, the more you think it's like a generational or a decade-long trade. Last week, I think there are pros and cons. Clearly, there's a bit more volatility, and that would scare away weak non-committal players. But there's a ton of institutions that were very enthusiastic about it that decided they wanted to buy it when it was 30,000 around the beginning of the year. And then they watched to their chagrin as it doubled, and they thought, well, it can't double every quarter forever. It's ahead of itself. And then they stopped and they wouldn't buy. And so in circumstances like that, what you want is a dip where they get to get in at a very good price. And so a lot of people think, oh, the price traded down last week. But if you actually look at the exchange volume on Binance, which is probably the most liquid, greatest statistical example we have, on Black Thursday in March of 2020, Binance, that exchange traded $2 billion in an awful day, the worst day of the year by most people's recollections. On the day when, and it was around 5,000. On the day when MicroStrategy announced our purchase, August 10th, that exchange traded $1 billion of Bitcoin in the day. I think that exchange has traded up to $14 or $15 billion of Bitcoin on some days last week and traded $60 billion over the course of 6 days. And it's the bottom line. Bitcoin's up by a factor of 4. Liquidity's up by a factor of 5 to 8, even 10. And some institutions bought $60 billion of Bitcoin at a good price last week while someone got panicked over what I view as FUD and they dumped it too cheap. So, I think what you see is that the long-term players are actually pretty happy to have the opportunity to get into this entry point. And if I was looking at it, the number one thing I'd always look at is the price moving on no volume or in a lot of volume? Because that tells you the institutional sentiment.
That's a very good point, yes. And Michael Sonnenschein, the institutions that you speak to, many have been invested in crypto for a very long time. So this was nothing new, but many are new. We saw huge institutional inflow in Q4 and Q1. So this will be the first time they've been exposed to something like this. Did it spook them?
I don't think that it does. I think what we've historically seen is when there are these types of pullbacks, you typically see investors using them as really opportunities to either average down on their position or in some instances to start a position. Having been in my seat over the last 8 years, I'm still yet to find somebody who's able to time the market, no matter how storied or experienced an investor you are. And I think generally the institutions that have been allocating to the space are those that are going to be in this trade for the medium to long term. And so I like to think about, well, if your fundamental reason for having this allocation hasn't changed, but suddenly you can buy the same asset for 10, 15, maybe even 20% less than you could the day before, then that for an institution is a really compelling opportunity. I think historically, one thing that has certainly resonated with institutions is really resiliency. Each time we see some of these very material pullbacks in price, we're seeing a pretty massive deleveraging of the entire ecosystem, which I think is healthy. And when you think about the fact that this may at times represent volatility that is larger or more pronounced than sometimes is viewed in equities or fixed income or other asset classes, it's almost a healthy reminder to a lot of investors of just how early it is for investing in the ecosystem and that it is subject to these types of price swings. But by no means do I think that this discourages investment. I think more often than not, we hear investors use this opportunistically as they think about building portfolios that include crypto over a longer time horizon.
Yeah, that's a very interesting point about the time horizon of investment and would separate investors from traders. And as Michael Saylor hinted, many focus on the price, but longer term investors focus on a whole lot of other metrics, even more so, perhaps, than the price. And Michael Sonnenheim, sticking with you for a second, we've been hearing louder talk, at least from what I've seen, about Bitcoin's energy footprint. We see it splashed across mainstream media and gleefully retweeted and shared on social media. Is this concern about Bitcoin's environmental impact, is it shared across institutional investors?
So the institutions that we deal with are exceedingly well informed, not just about the fundamentals that underpin and govern the Bitcoin protocol, but also obviously mining, which is a key component of it. And so I don't think it's any secret that mining is an energy intensive process and something that is, very, very, very important to the effective functioning of the network. Now, what's been interesting is that as institutions have come into the space, and certainly ESG has been a theme that many of them have been wanting to, allocate towards and think about in terms of their investment approach, it suddenly, though, feels like more light is being shined on this one area of the ecosystem. And I actually view this more than anything as an opportunity. The ecosystem is new. The mining ecosystem has evolved very rapidly as the difficulty has changed over time. As one day you could use a store-bought computer to mine Bitcoin, today it's obviously involved into a much, much different ecosystem and a very, very competitive landscape. And what we've certainly seen from our seat being plugged in to various miners in various parts of the ecosystem is that folks really are thinking about the environmental concerns and are using renewables as part of their energy mix. So I think as we, potentially shed more light on this and spend some more time on this to engage with miners in the ecosystem, it really is an opportunity for a very young asset class and a very young ecosystem to, I think, further embrace, other renewable energy sources and to make this a more material part of the impact they have.
I also like the point you make about how much the Bitcoin mining industry has shares, not just through energy mix, but also geographically. Michael Saylor, what about corporations? Do you see genuine concern there about Bitcoin's environmental impact?
I think the corporations would have the same thoughts that any other institutional investor has. I think they just want to be educated on the subject. And that's the key for us, provide education.
And that provides a very good segue. See what I did there? We can now talk about the Bitcoin Mining Council, speaking of education on the energy footprint. You announced on Twitter yesterday, Michael Saylor, that you had convened many of North America's largest Bitcoin miners and Elon Musk to discuss the industry's environmental footprint and what can be done to improve the understanding and perception of the current status. Can you give us some background on how that came together?
Sure. Well, Elon is a big believer in crypto technology as a force for freedom, and he's a big believer in Bitcoin as a long-term store of value, and he's expressed that sentiment in a number of ways, including taking a multi-billion-dollar position in Bitcoin. I think we all know he expressed a concern that he didn't want to see Bitcoin be the catalyst to bring to life dirty fossil fuels. And that created a bit of a Twitter stir. And that caused Bitcoin to dominate the news cycle all last week across the mainstream media. And I think it became pretty clear that that we have the Bitcoiners, we have a good story, but it's a very complicated story. And we need to find a way to share our story and to educate and get organized. So I think my first thought was there's no point in us tweeting back and forth at each other, because I don't think 280 character Twitters are right ways to educate the public and build consensus. So I reached out to Elon and I spoke with him, and we had a very long conversation. And from that, I asked him if he had relationships or had met with the Bitcoin miners. And Elon has expressed, right, on the record, he said he thought we would all benefit if we were able to publish energy usage and source of energy usage data. It turns out that Bitcoin miners don't actually have a good forum for communicating how they generate their energy. We don't have a shared common model for Bitcoin energy usage right now. And we don't have a future forecast model that we commonly use. So we're allowing other journalists in the mainstream media, or just anybody that wants to make up their own model. The most famous one being the boil the oceans by 2020 model that's going to cause the planet to overheat by 2 centigrade and kill us all. But and that's still it's still ratcheting around, right? So we have some bad models. And I happen to have a fairly nuanced model. My view is that energy usage is, energy efficiency is growing exponentially. The S19 miners are increasing by a factor of 5 in energy efficiency versus the S9s, and between the halvings and the shift to transaction fees and the upgrade of the miners, we're going to see energy efficiency increase exponentially and energy usage decrease. Essentially, I don't think there's any models or any understanding of how that's working, and it's a fairly complicated subject. I mean, it would take me about half an hour on your podcast here. I don't think we could talk about it. But what I can say is I had some detailed discussions, and I asked Elon if he had relationships with the miners, and he said he'd like to meet them. So I reached out to the miners and I asked them if they'd like to meet Elon Musk, and they said yes, they would. And so we set up the meeting because he wanted to understand how they're mining and what their plans and futures are. And they wanted to understand his concerns. And we wanted to understand how we could be the good guys in the entire ESG debate, because I think that Bitcoin they are the good people. We are actually driving sustainability. It is a great way to recycle wasted energy. And we have a great energy story. And so I think that the group came together to get Elon's thoughts and for us to brainstorm on what we can do in order to communicate constructively to the entire industry